We begin this lesson with a quick question for thought. Can you recall what the accounting process is? I'd encourage you to pause the video at this point and see if you could go through the whole process from start to finish. In fact, it's a cycle. Now that you've had a chance to think about this, let's just take a look at what the process is or cycle is. Now, we may start at different spots here, but generally speaking, at the very beginning of a business, we collect business transactions. We journalize them. They go into something called a journal. It's a set of daily transactions organized by date. We post those records to the ledgers. We record any kind of adjusting entries. These are entries that don't necessarily have a transaction. This is something that could have occurred over that affects the financial position of a company over many more periods than just one. We prepare a trial balance. We create financial statements, and then we close the books and we open them again just to start this process again. So this exactly is the accounting process or accounting cycle. Specifically, we're looking at the recording process in this set. So once again, here is the cycle. So let's just start off with some key terms. An account is an individual record or increase and decrease in a specific asset, liability, or owner's equity. And this should not be something unfamiliar at this point. These are all things which are ingrained in the fundamental accounting equation. Assets are equal to liabilities plus owner's equity. And debit and credit come from the Latin words left side, right side. Specifically, debit means the left side, credit means the right side. And a journal is a record of transactions in chronological order, where journalizing is the process of recording those transactions into the journal. And a general ledger, is a collection of all the specific accounts. So if you wanted to look up what kind of activities have happened in a specific account, like bank account or an accounts receivable or accounts payable, you would look at the general ledger. This is where our journal gets posted. Now, a lot of the stuff that happens these days is all done by computers. We think about going back to this process here, where this part is really what happens and is really done by the people. And then the computers generally will do the posting automatically. The adjusting entries are still done as journalized entries. And again, the trial balance we don't really worry about because it's something called the double entry system of accounting. But usually the financial accountants will be doing these parts here, which are the financial statements and the closing entries. The most complex part of this whole process usually comes down to these adjusting entries, which we'll get into in later lessons. So just to recap, we look at accounts and we think about the overall fundamental accounting equation. Assets are on the left side, they increase with the left and they decrease with the right. Now if we think about the fundamental accounting equation again, if we put an equal here, assets are equal to liabilities plus owner's equity. Now these are on the right side of the equation and they increase on the right and they also decrease on the left. And we've got other accounts which are related to owner's equity, our drawings, revenues, expenses, and these will have an impact on owner's equity when we close off the statements. So drawings are increased on the left side, revenues on the increased on the right, expenses increased on the left. So accounts are increased by increasing the side of a normal balance, with the exception of what we call contra accounts. For example, accumulated depreciation. So an asset is something where, let's say we had building, we have the contra account would be considered to be accumulated depreciation of that asset. And we want to keep track of that because when we go off to do our depreciation calculations for the year, we want to find out what the net value is at that point in time. So here's a quick little activity that we'll do as a class, and I again encourage you to pause the video at this point and see if you can do this on your own. We want to specify debit or credit for each situation. For example, an increase in the accounts receivable is a debit or a credit. Well, if this is increase in accounts receivable, we should already know at this point from BAF 3M, the Accounting Grade 11 course, that this is in fact an asset, and it is increasing through a debit. What about a decrease in expense? So again, I'd encourage you to pause and try and do these on your own before you get to see the answers. Having now taken the chance to go through these on your own, let's take a look at what the answers are. A decrease in expenses. Well, this is usually increased with a debit, so if this is a decrease, it should be a credit. Increase in a bank loan. Well, this is a liability. It is on the right side of the equation, so if we're increasing it, it is going to be on the right side, which means it is a credit. The increase in accumulated depreciation of a van, well, even though this looks like it should be what we call an asset, it is a contra account, so technically it acts like it's a liability in some respects, and so increasing it will be on the credit side. Increase in revenue, well, if we increase bank and we increase revenue, well, increase on bank would be on a debit side, so this will increase through a credit. Dear's drawings, well, this will be a debit. Expenses, if we spend money and we pay somebody off for an expense, that would decrease an increase in expenses would decrease our assets, and it will increase our expenses. So a decrease in asset would be a decrease in bank, which would be a credit to the bank side, and it should be a debit for the expenses. HST payable, this is a liability account. If we're decreasing it, it means we will be in a debit. And a decrease in land is another asset account. We'll keep on going with this just so you can try and finish things off. Again, capital account. It's useful to go back that one set of slide. This will give you a visual of what's going on. And this is probably one of the hardest concepts of the grade 11 course to kind of pull through and make those connections between debits and credits. But as you get more practice with this stuff, it really does pay off. It is critical to your success in this course. So going back to that idea of the lesson 2 with gaps, we recall that gaps are generally accepted accounting principles. And one thing that we have here is something called objective evidence principle. When a business transaction occurs, there must be evidence, and that evidence must be objective. What that means is no matter who's looking at that certificate or piece of paper, that everybody will come to the same conclusion, that it changes a specific asset in this way versus maybe a liability. It all depends on what that piece of paper is saying. And so we look at everything objectively. It shouldn't matter your mood of the day on how you record the journal entry transaction. So let's go into this. On September 3rd, $200 worth of supplies plus tax is purchased from Staples, of which $50 is paid in cash and the rest is put on account as an invoice. So this is really going to test you guys, and this is something which is a quick little review of how things happen back in the grade 11 course, and these should be things which you should be reviewing at this point and should be comfortable with. So again, with these examples, I encourage you to pause before you actually get to see the answer and see exactly what exactly is going to happen here. And you can, generally speaking, learning will be done best when you struggle a little bit and then you get to see what the answer is. So we're purchasing supplies, and this is going to be what we call an asset. So our supplies is going to be debited $200, but we're also going to have some taxes in here, plus tax. And we're also going to have this $50 is paid in cash. This is unfortunately a decrease in our cash or our bank account, and so we know that there will be a credit to our cash account. Now that means that there's $150 left over to be paid on an accounts receivable, and that's exactly where we have this invoice. By definition, we have this invoice as an agreement to pay verbally at a different or a future date. And generally speaking, invoices will get paid roughly 30 days down the line. And this is what we call a compound entry because it involves more than two accounts. In fact, it involves several. We've got our supplies, we've got our taxes, we've got our cash, and we are going to have an accounts payable account. So let's see how that all came through here. There's our 200. Our HST recoverable, because we're going to be able to recover this from the government, is $26. Our bank gets credited 50, and our accounts payable is going to become 176. Now, there's something really cool about all this stuff, which is called the double entry of accounting. I always recommend starting off with the things which we can guarantee we know and understand to be true. It really helps with going through these journal transactions. Like, for example, you saw my process of looking at this and saying, well, I know that supplies is 200. I know that bank gets credited 50 bucks. I know that there's going to be accounts payable. Maybe you don't know what this one is. And HST recoverable is going to be 13%. You want to make sure that whatever numbers add up on the left side are going to be equal to the numbers that add up on the right side. That's the double entry system of accounting. For each transaction, the debits must be equal to the credits, ensuring that the fundamental accounting equation remains balanced. It's usually programmed into the software, and you won't be able to enter things in for whatever, it will be programmed in there, and it'll basically say it won't let you complete the transaction unless those debits and credits are in fact working out properly, that they are equal. So here's how posting goes. So you've got that. Here's our transaction down below, and we end up having what we call our ledger. So this would be a ledger on the top, and this would be our supplies account. So what exactly happens here? Well, there's our September 3rd. Our supplies got debited. There's our $200. Where is it coming from? It's coming from this journal 2, J2. And then we update the balance because this is a debit balance. It ends up adding to the 1600 to make it 1800. So this is the process that we'll get to see. So now I'd encourage you to pause and try and guess. We've got 1, 2, 3 different accounts above. How exactly are you going to post these into the ledger or the accounts? So pause, try and do this on your own, and let's see the answer. So HST recoverable, we'd start off with putting in J2. This is a debit. We'll put in 26. And this will end up changing to, is it an addition or a subtraction? I think it will add to it, which makes it 156. Our bank account is normally a debit account, debited balance. So here we put in our reference, J2. We're going to have a credit, and that will decrease this value over here from 1800, and it will be 1800 minus 50, which will be 1750. Here we've got our accounts payable. This is normally a credit. And down here we've got this accounts payable staples, 176. It's going in as a credit, and it will add to this to make it 375. And again, our reference will be J2. The current processing, location of errors, and creation of a trial balance has become obsolete because, well, most of this is just done with accounting programs, and you got to see that with a comment at the beginning. Now users, all you have to do is do the journal entry transactions, and the posting and creation of financial statements are generally speaking done by the computer. So how exactly has this simplified our process? You do journal transactions, you do the adjusting entries, and the computer does the rest. It's important to understand the process though, just to make sure that you understand if there are any kind of errors or anything that looks out of place, that you can spot those things. As usual, you've got some work to try and keep you up to date and reinforce what you've just learned. If you have any questions, I'm always here to help you out. Reach out to me by email, ask me in the class. I'd be happy to support you in whatever ways I can.